and then we held all the way up to this daily high. That was for our next profits. We got those out, and then the final profit was taken off here, which was when the rebalancing has happened. Good evening, team. So today we're going to be talking through a trade that we took last night on Euro Australian dollar. This was within the FOMC move. It's a really clean move. It's kind of the opposite trade to what we took on Euro USD or Euro JPY, sorry, yesterday. Again, really simple trading. Just using all of our various bits of strategy like premium discount, supply and demand, resting liquidity and things like that to get into a really easy trade ultimately. So I'm going to talk you through how I took it, what ultimately I was looking for, how I got into the trade, and yeah, hope you enjoy. Now, as always, if you're not doing so already, subscribe to the channel and make sure you put any comments below if you're using strategies like this. I really like to understand how you're using it. Head over to my Instagram at StrongMoneyForex. I've got a free Discord mentorship. You can jump in there, come say hello to me, pop me a message on Instagram. I'd love to have you in the group. So let's get into the trade. What do we have here? So we've got clearly a bearish range here. What we're looking for is buys from these premium areas and sells from these premium areas and buys from these discount areas. Now for me, I wasn't confident that this was ultimately the big move down. I'll tell you why. There's two reasons. Firstly, we've got this trap here. This is a news trap. That spike that we've had here was created by news and it pushed the market down bearish. For me, just like Euro JPY yesterday, I am expecting this area to be swept, which is why, again, I haven't sold this yet, but we'll come on to that a little bit later. Now, what I'm looking for in this is I'm looking for what's called inefficient pricing to be made efficient. And what I mean by that is this area here that we've drawn out here, okay, so this move up before the push down, this entire area is a supply zone, okay? This is in its rawest form, this is exactly what supply is. This is where a load of orders and liquidities come into the marketplace, it's pushed the market up, and then the bears have been strong enough to push the market and displace the market like this, creating things like imbalances and ultimately breaking this structure. When this structure is broken, this low is broken, it takes out loads of people's stops and it puts loads of people's sells into the marketplace. So it's a really important concept to understand. Now, what happens is these areas, they need to be made efficient. This push down here, this entire move here, so if I just take this chart back just so you can see it a bit clearer, okay? This entire area now here, and we'll draw it on for you, this is an inefficient zone, okay? It has orders that are there. Remember, the market is a zero sums game. There has to be a buy for every sell, a sell for every buy. So if there's loads of buy orders here, then they have to be balanced out. For people to be able to take profit, it has to be balanced out. And it does that by pushing back into and creating efficiency. So right now in this area, price is inefficient. Okay, what that means is that this is really attractive for price, especially when you've got things like imbalances. Imbalances show us that there is so many sells in the marketplace that it's pushed down without any buy orders coming in to retest that. So these are really magnetic for price. Now, if I just close this replay tool quickly for you, we had a push up here and I didn't take this sell. It was a very good sell, as you can see. The reason why I didn't take it is twofold. Firstly, we hadn't created efficient pricing. I'm not interested in selling this marketplace until this supply zone has been retested and made efficient. It hasn't yet had that at this point here, so I'm not interested in it. The second reason why I wouldn't sell from here is because we haven't reached premium pricing. We are in an area which is the top half of this entire range, but we haven't reached premium. That's really where I want to be getting the high value sells. So we had this push down. And if we drop down a time frame, you can see we had another leg down here. And what you can see has happened here to the left, we've got a liquidity point here marked by this blue line that price has stalled upon. Okay, now I tried to get in on a first entry, as you can see here, and I got stopped out. We had a good push up, then a good push down. Didn't really have the conviction that we needed ultimately. It was a good time of the day. It was 2 o'clock, so in the New York open time. So it was a good time of day to be trading, but ultimately it didn't work out. So when FOMC came into the marketplace and created this move, for me, this was my signal to get back in. We had this perfect ISC, okay? So this is what we call an ISC, which is either, you can call it an institutional sweep candle or an impulsive sweep candle, whatever you want to call it is really up to you. So we had an ISC there, and ultimately a big push up. That ISC, it cleared out liquidity to the left, it cleared out all these liquidity points. So now all of that generated sell side liquidity is gone, and then we correctively came back to test it. I'm getting into that trade all day long. Even though it's through FOMC, I'm happy to hold it. And what happened is we took the trade with the 21 pip stop. We took off our first profits here at, I think it was about 2R, yeah. So at this first liquidity point, that was where we got our first profits out, and then we held all the way up to this daily high. That was for our next profits. We got those out, and then the final profit was taken off here, which was when the rebalancing has happened. Now this is what we call now efficient pricing. Okay, we can mark it on the charts like this. I'll show you how. So we connect that dot to that dot. We mark it on as EPA, which is efficient price action, okay? And now we have an efficient zone. We've got this triangle formation between the supply and the efficient pricing, and now we can look for sells. Now coming into tomorrow, what I'm going to be looking for, we can see that, do you know what, we had an ISC there. We could have taken that trade, to be fair. We could have taken that trade, absolutely, but we didn't. It wasn't really quite what I was looking for. Just like on Euro JPY, I'm expecting this trap to be blown. So tomorrow, what I'm going to be looking for is for price to come into this zone, okay? Take deeper. We also haven't taken out 50% of that supply yet either, which I'd quite like to see. And what is sat almost exactly at 50%? Let's just mark it on. Look, the higher that trap is almost exactly at 50%, and we've got imbalance sat above that trap as well. So there's all these reasons for price to go higher. For me, what I'm looking for now is I'm looking for a push up, maybe some sort of false move, and then a push up, push down, push up, push down, and that will be my move. So that's what I'm looking for. Now, if you've learned something in this video, please pop me a like. And as always, I'd love to hear from you, hear how you're using these concepts yourself. Do you use an ISC? Are you using an institutional candle or an impulsive sweep candle? Let me know in the comments below. And as always, make sure you subscribe to the channel with notifications on so you can catch me on the next drop. Thank you.